Good morning. Thank you very much, Shane, for that introduction. I hope I'm coming through clearly for everybody. Shane, you might better just let
Yeah.
me know.
Yeah,
Okay,
absolutely.
all good.
All
Okay,
good, thank
excellent.
you.
Great. Thanks. Thank you so much for joining us this morning. Yeah, I've been. You were saying been here for a while. It's nearly 7 years with Draftworx for me. So done a lot, had a lot of fun in the last 7 years, and hope to have lots more fun for many more years to come. So this morning's session is dedicated to the methodologies in Draftworx, and we've spent some time in the sessions before this morning, just getting everybody familiar again with Draftworx, getting to know and understand some of the new features. There's some great stuff coming. We're all really, really excited. But at the end of the day, you, the practitioner, is out there and you need to create the file. And the framework is sometimes reasonably easy because, oh, it's a CC, so I must be using the CC framework. But what about the methodologies? What are you actually going to be doing in that engagement? And how do I go about selecting which methodology to choose? There are now 10 available. And how do you make the choice? What is the best? So what I'm going to do this morning is I'm going to give you an outline of these methodologies. I'm going to look at a few of them and go through what I've termed key documents that are critical for completion in each one of those methodologies. And I just want to give you a general overview of what's going on in each one. So let's jump straight in. And I'm going to start off with a presentation. It's a little bit easier because there's just some theoretical content that I want to go through with everybody as we get going this morning. So firstly, what is available? And here are the 10 methodologies that I've spoken about. We've got Accounting Officer and we've got Accounting Officer Plus. Now that's a recent addition. I'll touch on that in a moment. We've got Agreed Upon Procedures, which is a recent addition. We've got the Attorney's Trust Audit. We've got Audit Light Plus. We've got a Compilation and a Compilation Plus. We've got a RAC, which is our Risk Assessment Per Component, which is our premium audit methodology. It's one of the few additional modules that you need to purchase to have access to it. And then we've got Review and Review Plus. Now, what are these pluses? Firstly, the plus methodologies have come about where we've reworked, updated, and improved an existing methodology, or have brought about a replacement that brings in new technology, new features, new look. And so, for instance, if we start just with the first one, Accounting Officer and Accounting Officer Plus, we've actually worked on this Accounting Officer Plus for some time. We were just waiting for CIPA approval to release this. We've gone and taken what was an old methodology in Accounting Officer, those of you who've maybe used it before, and in this case, we've virtually completely replaced it with updated technology, more automation. So it's a much less manual methodology than what the old Accounting Officer Plus was. Audit Light Plus, we don't have the old Audit Light anymore. We've actually completely discontinued Audit Light a couple of years ago. Audit Light Plus was the refresh that we did a few years ago. Compilation and Compilation Plus. What you'll note there is if you have a look at the applicable standard is that the old compilation is not actually designed in terms of any specific standard. It was just a bunch of documents that we put together to assist you in the compilation of financial statements, whereas Compilation Plus has been designed specifically in terms of ISRS 4410, which is the standard associated with compilation of financial statements. Review and Review Plus, there you'll note both are in terms of ISRE 2400, but the old review is outdated. When the new standard came out some years ago, we knew we needed to update it. But rather than updating the existing, we went and created a brand new methodology. And we'll look at some of those working papers a little later and what we've tried to do in Review Plus. The standards, this is really just a guide to assist you. Something like the Attorney's Trust Audit. It's based on the URBA guide. I just want to caution you that to date, we still don't have the new guide to deal with the new Act, which actually commenced in November 2018. last year was a difficult year for attorney trust audits because there was a new act, but no new guidance, and that guidance is still not available. I stand under correction. I've not even seen any drafts or discussion papers from IRBA on this, and we are once again approaching another year end when all of these attorneys trust audits need to happen, and I'm hoping we'll have some guidance before the close of the year. I know in 2016 the guidance came sometime in March, which wasn't too bad, except that we just were asked the very next day after the guidance was given, when is Draftworx going to update their working papers? Okay, it's not overnight, unfortunately. It will take some time. We don't know what the new guide will look like. We don't know what changes there will be. Although I don't think it'll be quite as much as what the new guide brought out a few years ago. There are going to be some new procedures and things that we will need to incorporate and consider. All right, so I was mentioned earlier that the Accounting Officer Plus is a new methodology. Now, this has been designed largely based on the CIPA working papers. So we've taken knowledge that we've gained in working with other methodologies and generating other methodologies, and then we've gone and had a look at CIPA's working papers and started incorporating some of the processes and procedures that CIPA have put in place. Now, that does not mean that you have to be a CIPA member to use Accounting Officer Plus. CIPA have done a lot of hard work in preparing that methodology, and we have permission to use that, and that's what we've gone for with this. But I do also want to mention a body like CIPA. We are in discussions with them. We are considering building a specific framework, or sorry, a specific methodology around their approach to what an accounting officer methodology is. But it's difficult because there is no guidance document. All we have really is the CC Act. And that's why you'll see the previous methodology just references basically the CC Act. And I'll touch a little bit more on the CC Act and what an accounting officer is. Now, the Rac Layouts. What I mean by this is there are improvements we made years ago when we brought about Rac, that we decided, even though Rac is a premium product, there's stuff in there that we needed to use in other locations. So for instance, in Rac, you need to do a whole lot of work, and then you need to populate the audit programs. In Rac, there is some carryover of information from one working paper to the other. So that Rac layout is really about, are we doing some automation? Are we making some visual improvements? Are we, in other words, you're doing something in one working paper, it could have an impact on another, and we'll touch, that's specifically why I've chosen some of the working papers to look at this morning, to go and just see what impact that has on each of the methodologies as you go. Now, the availability, there are some that are available in all regions and some that are only available in South Africa. So for instance, the accounting officer methodologies are based on a South African Act. So we have not sent that methodology to other countries because it's not applicable. It's specifically dealing with local requirements in a local act. The same can be said for the attorney's trust audit. That is based on South African law. There is no application for that anywhere else in the world because it is entirely a local methodology. However, agreed upon procedures, Audit Light Plus, compilations, reviews, those happen, and so that's why they are available in all of our international distributions or our international versions. Now, there are a couple of these methodologies that I've marked with a star, that being the accounting officer, the compilation, and the review. So these non-plus methodologies. What I just want to point out, folks, is that these are older methodologies, and in particular the review methodology. It's based on the outdated ISRE 2400 from many years ago. We want to phase these methodologies out, but we don't want to do it overnight. In particular for compilation and accounting officer, there are some users who are still using it and like using it. what we do is we do pick up stats from time to time. We look at how many people are still using these various methodologies, and then we can make informed decisions about whether or not it's time to take them out. If you are using the Accounting Officer and you love the Accounting Officer, please do have a look at Accounting Officer Plus. Please do see if that will work for you. One of the other options for an Accounting Officer engagement is actually use the agreed upon procedures methodology. There's no requirement that you have to use a particular methodology. There's only specific things you have to report on. And if you've got working papers of some form to prove that you've done what's necessary to be able to give that report as the Accounting Officer, then you're fine. The old compilation, as I said, was not really much of a methodology. It was more a collection of documents to help you. Now, the compilation plus follows ISRS 4410, but if you're just preparing financial statements and you don't want to follow the ISRS, you actually have the option of not selecting a methodology at all in Draftworx. And then you can just import those specific working papers you like to have. Maybe you like having the fixed asset register or something in the file. You can just import those files and you don't have to worry about other documents being in this file. So if all you're doing is compiling and you're not following any particular standard, leave methodology blank when you create a file in Draftworx. That's an option. And I think compilation is used a lot as the methodology, just because people often think you have to put a methodology in there, and therefore it's not anything else, so it must just be a compilation. So I think folks then just go and say, okay, well, this is compilation. That's all I'm doing. But then they don't actually even open or look at any of the other working papers. So that's an option to even select nothing. Okay, so that's just a bit of an overview of what is available. And there's a slide now just on Accounting Officer. It's something that we're having a lot of questions and answers with clients. And one of the difficulties is that in South African law, an accounting officer is defined in the CC Act. And then there are a number of acts like the NPO Act that then just refers you back to the Closed Corporations Act for what the definition of an accounting officer is. So when we say here's an accounting officer methodology, it sometimes has far-reaching implications. And some people will tell us, yeah, but I'm the accounting officer of the trust. And so I need to do these following duties. Well, what is an accounting officer? Does the trustee define what accounting officer is? Or are you just using the term accounting officer because that seems to be what everybody uses? Accounting officer is defined in the CC Act. So the moment you use the term accounting officer on a report, on any document, if you say you are the accounting officer, you are subscribing to the definition in the CC Act. So please do be careful about the use of the accounting officer. When we have the accounting officer methodology and reports, we have to mention the CC Act because that's what an accounting officer is. There are duties outlined in the CC Act for the accounting officer to perform. The NPO Act gives you additional duties, but can you then just ignore the fact that it's talking about the accounting officer in the CC? I don't want to give you a prescriptive answer here, folks. I just want to draw your attention to this fact that if you are using or talking about an accounting officer, if you choose to call yourself accounting officer on any report in your financial statements, be aware that you are calling the definition as per the CC Act. You need to be aware of that, and you need to make sure that then you are complying or are aware and can deal with any implications. Okay, so methodologies, where do they sit? So the methodologies are found under the Working Papers tab. It used to be called Audit Programs or Review Programs. After many years, we finally got the developers to change that because that's what this is. It's working papers. If it's not an audit, that doesn't mean it must be blank. These are your working papers. This is where you will find, if it's an audit, the audit programs that you need to complete and run. But this is also where you will find all your planning documents, your completion documents, and where you can then go and store all your working papers that you are preparing in the course of your engagement. Okay, and then the areas that you see here, this finalization, engagement and team setup, just to quickly have a look at what's happening. And Shane, I think just a note, we must probably just send out these slides when you send out the video as well. I think we have done it in the past and we will do it again. Just so that you have this information at hand. And what I just wanted to outline here is, based on our various methodologies, what sections you are likely to see. And you'll see that in all the methodologies, we do have a finalization section, and we do have an engagement setup section, as well as the planning section. But then there are some variations. So for instance, the risk assessments, those are mainly happening just in RAC, and we've now included some in the new Review Plus as well. In Audit Light, this risk assessment happens in the audit program. So that's from section 20 onwards. So that's why you don't see a section 15 and 16 in Audit Light Plus. None of the others have risk assessment. The audit plan is also unique to RAC only in this case, not even Review. And again, that audit plan is defined in the audit programs when you're dealing with Audit Light. Other planning documents. Now, these are generally a collection of additional template files that may be helpful. So they're not required documents, but they could be useful. So some of them will deal with dealing with difficult and contentious matters, for instance. There's quite a few, and you'll see that that is available in the Accounting Officer Plus. It's not in the agreed upon procedures. That standard is too short to provide any additional requirements. The Attorney's Trust audits don't have it. We do have it in Audit Light Plus. There are some in the compilation, but you see they've actually fallen away when we get to Compilation Plus. They are in RAC, they are in Review. They're not in Review Plus, but I'll show you a little bit later where we've started storing. And even in RAC, there are some documents, but quite a lot of the additional templates we've moved out into a new tab, which I'll show you shortly. Now, the special risk areas, section 20 to 29. In the case of Accounting Officer Plus, agreed upon procedures, attorneys, trusts, and compilations, that section 20 to 29 is basically all your areas. So all of your review programs, audit programs, whatever you may call them, will sit in this 20 to 29 section. There's no need in those methodologies to further split them out. Compilations, the Compilation Plus, just you'll see that just stops at the planning. There's actually nothing else in the body. You can add as you wish. There's no prescriptive documentation in those areas. RAC has those special risk areas, Review, and Review Plus has those special risk areas. Then the cycles, you'll see that all those that have got all their working papers, all their audit programs in section 20s, they're not going to have the additional cycle areas. So we've not followed the same cycle-based approach in those methodologies. The completion working paper is unique to RAC. And then we've got some other additional templates that you will see in section 80 to 89. Generally, you won't open up those documents. Those are just for internal use. And those will actually fall away in future versions as we just improve how and where documents are accessed within each methodology. Now, there are often questions about, what about estate agents, and what about what they call sectional title schemes? Well, we do have methodologies in place for estate agents, but when you go and read the requirements of estate agents, is they need to be audited in total. The entire business needs to be audited. There's a distinction between what you do for estate agents, what you do for attorneys' trusts. In the case of attorneys' trusts, there's actually not a legal requirement to always audit the business. It's probably good business practice, but it's not a requirement. Whereas with estate agents, you are required to audit. So what we've done in Audit Light Plus is it's actually found in its own section, in section 29 in Audit Light Plus, but it's available in RAC in this temp folder that I was mentioning a moment ago. And what you'll see in RAC is if you open up any working paper that's a RAC template, you'll see this RAC tab becomes available. And there you will find additional folders and working papers that you can choose from. So what you can do is go and select State Agents Affairs Board, and you can then go and select one of these additional template documents to create a file from. It'll open up a window like this, and you can go and specify what section do you want to insert it into. So give it a reference, and I'm sure that was covered in one of the previous trainings, how to import a file into Draftworx, the importance of that reference number being on the left-hand side. Give it a name. Where does it need to save? Okay, that audit programs, that's last year's slide. It's now working papers, and you can input the file into that folder. In the case of sectional title schemes, it's again automatically included in Audit Lite Plus, because Audit Lite Plus doesn't have the Rac tab. And in Rac, it's also available in these templates. So once again, under Rac, you'll find the sectional titles, and we've just got one document that we've prepared. And what this document is simply going and doing is it's actually going through the CICA guide on these sectional titles. And there's quite an interesting discussion on it. If you are doing sectional title schemes, please go and read through that. It's CICA's opinion that you actually can't report as required by the Act. There's one of the things that you need to report on. That's a problem. I did cover it in last year's training. I don't want to rehash it, but if you're unsure, please just go and read through that. I do take you through that process in this 24.20 sectional title schemes template file. Okay, so you'll again just get insert name here. Please type in the name and go for it. All right, so another thing that's coming very soon, oh sorry, the templates folder is only available in Rac and Review Plus. So Review Plus has the same approach. So I mentioned earlier that Review Plus doesn't have those section 19, 18, and 19 documents. But in Review Plus, all of the additional templates that you might need are found in a Review tab. And you'll see, just like there's a Rac tab for Rac, there will be a Review tab for Review Plus. Now there are others, I'll touch on it later, that the Rac tab does sometimes come up, and it's just a little bit of a backstop again that we've put in place until we can finalize some changes that we're needing to make. And what we're intending to do is all these additional templates that you don't always need. We don't want to overburden files with not applicable documents. We want to give you the ability to say, oh, okay, I'm doing a sectional title, so I want to put in the sectional title schemes template file. We're wanting to make it a little bit more user-friendly so that you don't end up with these massive files full of things that you have to go and mark as not applicable. So that's our approach. So for now, in the Rac and Review, we are also very hard at work and updating our color schemes. So this is just a very quick and basic example of the changes that we are in the process of making, from before on the left and after on the right. So we've gone for a slightly softer color scheme, and you'll see that the greens are falling away and are becoming a lighter blue. We are hoping that this layout is going to be a bit softer on the eye. I'd love your comments in the question answer box. What you think just preliminarily at what I'm showing you here. This will probably be released in the next few weeks. Our next major update in Draftworx is coming. Some new features and fixes coming, including all of these templates. And little things like the borders. Instead of a black border, it's a gray border. So you can still see it, but it's not quite as harsh, and we do hope that it's going to be helpful and useful for the eye. And yeah, please do give us feedback and let us know what you think of it. Just to go through what those new colors are. So, and we're standardizing this across all our methodologies. We are literally opening up every single methodology document and updating all the colors. Got the darker gray for the main headings, lighter gray for questions. You'll see a lot more white backgrounds are going to come in as well. The green user inputs are now going to be a light blue. And the roll forward cells, now this is applicable to Rac and Review Plus, where there is information that you can carry over to the next financial year once you roll forward. Those are going to be in a slightly darker blue. The yellow, it's still yellow. It's just a slightly softer yellow. We had a bit of a toss-up. Do we want to really make it in your face? But that can also be sometimes a bit painful when your eyes hurt looking at the yellow. The red as well is softened a little bit. So the yellow is this warning or a compulsory input, whereas the red is there's actually something wrong here. You gotta complete this correctly. And then we've gone for an in-between orange as an information cell. If you are seeing these orange cells, and we might see one or two as I go through some of the documents with you just now, this is just really to provide user information. So it's not part of the methodology. It's not something you have to read and complete in order to complete the engagement, but it's a warning. Please consider this. Please have a look at this carefully. And then also you'll see cells that have just got a white background. And that's just where we have calculated a result. So you don't need to actually type anything in there. But if you change things above or you change answers elsewhere, it might actually change that result. So it's just to show you that it's calculated. If you see it's blank, maybe you're missing somewhere. If you click on it, you might see there's a formula in that cell, and there's something that you need to go and do. Okay, so guys, that's not so brief, but that's the introduction. Those are the methodologies, some stuff we're changing, the colors, we're excited about it. The team was working hard on that. Hope it works. We spent many hours debating and discussing those colors. And all right, next slide here. And sorry, just a second. Hi, Janita. I think you just need to mute your mic there for us, please.
I'm just pausing the recording for a bit.
Key decision documents. That's what I said we'd go and have a look at. And for each methodology, I've chosen these 6. The agreed upon procedures at Accounting Office Plus because they're new. But the others are the more automated methodology. So I'm not going to look at the old review methodology. I'm not going to look at the old accounting officer methodology. The compilation plus methodology is super easy. Yes, there's requirements, but it's easy to go through those documents on your own. But for these specific ones, there are some key decisions and documents that you need to fill in to make sure that the process, that the entire engagement can flow correctly. So what I'm now going to start doing is I need to start flipping between my screens. And let me first start with Rac, and I'm going to look at Rac's 10.00 document. Okay, so the grouping that you see at the top here, this is the information you typically would want on top of a manual working paper if you are going to print it. This is the information about the client, the year end, your sign-offs would pop in here as well. But the groupings are in place just to allow you space on the screen. And you'll see that if I scroll down and that grouping is open, then I'm not going to be able to read my questions. So this is just a bit of a tip. And what we've done and why we've got that grouping is to give you some space. And if that's still not enough space, you can actually close the ribbon bar by double clicking on one of the headings. Closes the ribbon, you can still click on the ribbon to get to things. And then you can just double click on the ribbon to bring it back as well. I do know some screens don't have particularly high resolution. I work on a 55-inch 4K monitor, so I can fit 9 versions of Draftworx on my screen and see them all quite clearly. Some people struggle to see one. So that's just a couple of tips to make your life a little bit easier in seeing what you are doing. Okay, first and foremost, this is our copyright. Guys, this is our methodology. We developed it. We worked hard on it. Please don't steal it. You need a Draftworx license to use it. And with Rac, you need to be Rac enabled. Otherwise, a warning will come up and it won't allow you to open up any Rac template file. Okay, you will see first and foremost, here is a yellow cell. And I said earlier that that is a warning cell. Well, sorry, yes, a warning or a compulsory input. Go and double check my notes. So make sure I don't lie to you. Don't want people recording this and fact checking me like they are for the Trump trials or Brexit. Now this response that we're looking at here in this cell is whether this is a new or a continuing engagement. And to give you an idea of the importance, if I click that this is a continuing engagement, beautiful, the yellow cell goes away and it's replaced by the lovely user input blue. But what impact has that had on my engagement? Okay, when you have a new engagement, there's more work that you need to do. So there's a document in Rac 10.01, which is the new engagement predecessor auditor review. And it simply just says, when you open up this working paper, since this is a continuing engagement, this document is not applicable. So what do? You go to the right-hand side, and there is a set as NA. You click the button, and now it'll mark it as a blue, not applicable document. However, if you have said here that this is a new engagement, and I go to 10.01, have a look at the difference. Now, suddenly, I've got questions, and there's work that I need to do in order to complete the requirements. Okay, so the importance of some of these compulsory input cells cannot be understated. You've got to give this information, otherwise 10.01, I don't know. I can't work out if it's required or not. And if you don't complete 10.00 correctly, you end up going and doing 26 steps of not applicable stuff because you did audit it last year. So when it says go and speak to the previous auditor, you've got to scratch your head, figure out who was the auditor 10 years ago when you adopted the client, go and ask them questions about the audit. It doesn't seem right. But if it's your first year clerk and they've just learned to follow instructions very carefully, they might spend a week going through and contacting the auditor from 10 years ago to complete these steps. Okay, so these compulsory input cells are important. I'm going to return it to a continuing engagement, however. And as you complete each step, you can simply go and use the quick sign-off button on the right-hand side. This initials and date doesn't sign off the document as a whole, but it will insert my initials and the date into each cell that I have selected. Okay. The questions on this engagement acceptance and continuance document are designed and we've brought it in from multiple sources. So it's from ISQC 1, but a lot of the questions are about yes or a no. The second one is, am I a component or a sole auditor? So a bad example for me to click on next. Number 3 is, has there been any change in the terms of reference? And here I need a little bit more space to see the entire question. Click the drop down, and as soon as I say to the system, there is a change in the terms of reference or requirements for the audit engagement. If you're not sure what that means, go and revise it to 10. Okay, and as soon as I say yes, it's asking you to document those changes. Now you have a choice. When any methodology asks you to document, you can go and insert a working paper covered in one of the previous trainings as well. How do you insert and import working papers? And I can then go and just simply hyperlink the cell to where in the file I'll find this documentation. Okay. In some cases, you might want to prove maybe the answer was no. And I want to go and insert a reference to give some evidence that there has been no change in the terms of reference. Okay. I can go and import my working paper and insert the hyperlink. If it's something short that you can type in the cell, you're welcome to type it here. You can type in your evidence, but be careful about starting to write long paragraphs, because if I type long enough, this text is going to get so long that it's no longer going to fit in my cell. It's going to go off the page, and then if I try and print this document, it's going to be a little bit of a disaster to print. So there is all my documentation, and now I'm going to not see everything initially. It's not going to be visible. If I go and I just rewrap those cells, oops. still doesn't open it up. Okay, there's other merged areas in here, but if I print that, it's going to fall off the page. It's not going to work so well. So if you're documenting a lot of information, please rather put in a hyperlink, and that's going to save you trouble in the long run. Okay. Other things that are sitting on here in yellow, you'll see there's reference to independence conclusion on 10.02. Now you need to go and open up 10.02, and that will then bring the results back to 10.00 for you. Okay, so you'll see that there's a reference in that cell to 10.02. Go and complete it, it brings it back. I'm not going to go through the detailed questions with you. You see we have put some hyperlinks in already for you to go when you get to this question. Go open up 10.05, complete the document. Asking you about preconditions for the audit. This is specifically looking at the framework. Go and have a look at the framework document. There's a hyperlink, it's suggesting a hyperlink to the engagement letter. Now we do have engagement letters in most of the methodologies, but we don't want to be prescriptive. We can't tell you that our engagement letter is the only right way of preparing an engagement letter. Your firm might have its own policies, its own way of doing things. So if you're using ours, go and use our hyperlink, but we didn't want to default that because you might have in your firm your own approach to that. Okay, going to scroll down. There's now reference to other sheets within this document within RAC. It's asking you about an EQCR, Engagement Quality Control Review, and it's also asking whether the entity falls within the Companies Act. And that needs to be completed on 10.00.02. There, it's asking the question, does the entity fall under the Companies Act of South Africa? And this is critical if you're a non-South African user. The reason the question is here is that in South Africa, if you have a Companies Act, there is something called a PI score calculation that you need to perform. So as soon as I say it's under the Companies Act of South Africa, here is my calculation. Okay, and there are a number of questions here about whether or not an audit is applicable to the entity. However, even if you're in South Africa and it's a trust, it doesn't fall under the Companies Act of South Africa. Then I can merely, based on professional judgment, decide on the size of entity that I believe this is. What size, and I can just say whether it's a small, a medium, or a large entity. And that's based on professional judgment, considering complexities within the entity. So you could have a trust owning R1 billion in assets, but it's not a trading entity, it's holding it for long-term gains. Then I would say it's probably a small entity in the relation to its complexity, even though it's got this R1 billion in assets. Whereas you could have a 10 million turnover company that you might want to call large because of the complexity and number of transactions that occur through that entity. So maybe it's a company that rents out pool tables. And so somebody's got to go out and collect all these R5 transactions or something of that nature. Maybe not the greatest example, but there's a lot to consider in terms of entity size. Just again, for South African users, don't forget that CCs can fall under the Companies Act where an audit is required. So if you have a CC, it falls under the Companies Act for the purposes of this document. You got to go and decide what type of entity it is, and there sits closed corporation as one of my options. Okay. Yes, I know CCs have their own act, but the Companies Act is there to supersede. I heard somebody talking about it the other day. As far as the CIPC is concerned, they would just love closed corporations to disappear and die. They don't want them anymore. They want to get rid of them. But at the moment, the CC Act still exists, even though you can't register new ones. That's the best they could do. They can't get rid of them. They still have an act, and there's no requirement yet. And I say yet with a ... Who knows? Maybe. Haven't heard anything, but maybe. Who knows? Okay, so that's the questionnaire. In terms of your PI score calculation, you would need to go and put in average number of employees, the total third-party liability. And I get a lot of questions, Leon, why don't you just automate this? And the problem is, this is the first document I'm completing in this file. If you don't have a 100% correctly linked trial balance, already in the file, as you are starting the audit, then I cannot guess or estimate what this PIS score should be. If you then go and relink something and without realizing it, it changes the value of revenue. And suddenly you've gone from a PI score of 349 to 351, that's a problem because maybe you decided you weren't going to audit them based on that calculation. And then when the financial statements are finally prepared, you don't go back and revisit the PI score calculation. So where we've got this calculation, we are asking you to insert it manually. And until you have inserted all 4 values, it's calculating a PI score of 0. So that if, what's the number of individuals with direct or indirect beneficial interest? Let me go back and try and figure that out. And you can't forget it because the PI score is 0. You're going to remember, oh, hang on, that looks wrong. Come back to the calculation and you'll see that there's a blank row. So there's a little bit of a control there. The guidance that you see, these are hyperlinks to our guidance sheet where we've gone and just copied and pasted various information from the Psycho Psycho Companies Act Guide, just to help you with the definitions and understanding of what's going on in here. So I'm just going to fill in a few questions here, get everything completed correctly. And it'll now tell me whether an audit is required or not. In this case, one of the requirements has been met. So the entity is required to be audited in terms of its MOI. In this case, I tick that as yes above. But the PI score is greater than 350, so it must be audited. Section 90, subsection 2B does apply because it's a private company or CC where the PI score exceeds 350. So if I go back to this working paper, you'll see that it's now inserted the values in white because it's calculated, and it's telling you that it's under the Companies Act what the PI score is and what the fact that 92B is applicable. The other questionnaire here on this sheet is the EQCR requirement. And according to the ISAs, only one specific requirement is there. Is the entity or client a listed entity? And if that is a yes, you have got to perform an EQCR. If it's no, you need to go and include your firm's criteria for an EQCR, which should be in your firm's quality control manual. Now, as you add additional criteria, please note that more rows are automatically added. As a general rule in our methodologies, it's preferable not to go and insert rows and columns manually, because there are sometimes formulas in place that will be broken or damaged or lost if you add rows or columns, or in fact delete rows and columns. If something shouldn't be there, please don't delete the row. It could affect our ability to roll forward information, could affect our ability to carry that information to critical areas of the audit. So in general, please rather go and delete the content if you don't like it anymore, rather than deleting the line. Please don't. And if you put in your firm's criteria, you can then go and say whether or not it is applicable. And as soon as any one of those are applicable, according to your firm's policy, you need to perform an EQCR, and you can give it that solution there. Okay, partner sign-off. Now that you could do with the sign-off on the right-hand side. I haven't logged in as a partner, so I can't at the moment. You would say set as partner reviewed. Okay. The other document here is specific to South Africa. It's the disclosure of audit tenure, and there is a beautiful government gazette from 2015. I'm sure you've all read it exhaustively. Otherwise, quickly run and go and get it. Audit tenure sometimes needs to be disclosed on financial statements. There's a fairly narrow requirement. So you would go and complete this questionnaire. Now, the majority of you will probably not have the requirement to disclose audit tenure, but the question could arise when the regulator IRBA comes and knocks on your door and wants to review the file, and they say, did you consider whether or not you are required to disclose audit tenure? And you say, no, I didn't consider it. That could be a problem. Here is where you can go and document the answers to those questions posed in the audit tenure documentation from URBA, and you can then just prove that it's not required. Okay. Now, I don't know if any of you have noticed, we previously had the guidance sheet on the far left. We are moving that guidance sheet to the far right. Many of you will now know that there is a guidance sheet. We've just moved it so that you don't open up on the guidance sheet every time. Just to save you some time, it opens up on the first sheet after that. But the guidance is still there and still available if you need it. The final thing you need to document on 10.00 is whether or not you're actually going to accept this client. And this is critical because if you don't decide that you're going to accept the client, it's not going to let you populate the audit programs later on. So this is pretty critical in the scheme of things. Don't go and forget to actually accept the client as a whole. Now, when we start looking at some of the other methodologies, I'm going to very quickly skip between them. Let's go have a look at Accounting Officer Plus. Okay, now Accounting Officer Plus, the document here looks very similar to what you've just seen me do in RAC, and that's going to be the case as we go through these methodologies. Why? Because client engagement acceptance and continuance comes largely from ISQC 1. So it's not an audit specific requirement here. There are some things in there that are audit specific, but there is also a requirement for you to consider whether or not you're going to accept the client irrespective of the methodology if your firm is subscribing to ISQC 1. Okay, so as you scroll down, similar questions are in place. You'll see this one even pulls in the PI score as well. Gone to a lot of trouble. It's really a copy of what you see in audit, although there are quite a lot fewer questions, so don't be confused. But once again, your key decision at the end of the day is whether or not you want to accept this engagement. Okay, PI score, same first question. Does this entity fall under the Companies Act? And then the guidance on the far right. Now, this document, however, has a setup questionnaire for Accounting Officer Plus, and it's asking you, is this the first year that we're performing the engagement? Is this the first year of operations? So these are just some basic setup questions that we then use to go and adjust how the questions are posed. Okay, it's asking about whether or not you're preparing the corporation's tax return. It then adds additional questions in the engagement acceptance document. It asks you what the date of the engagement letter is, and it asks you which financial reporting framework are you using for the preparation of financial statements. So if there are similarities, yes, but that's not 100% the same, but the critical decision at the end of the day is that you must show that you have accepted. One of the funnies about engagement acceptance and continuance is you shouldn't even be starting to complete this document until such time as you have decided to accept the engagement. So you shouldn't create a client in Draftworx until you've accepted the engagement. But the problem is this questionnaire sits inside the methodology. So the only way to get to the questionnaire is to create the file. So what we're saying is that this might not be your primary document. You might go and have these discussions with the client before, but once you create the engagement, you know that you're accepting them, hopefully, justifiably. And here you are just documenting the results of the assessments that you have made earlier. Okay, let's look at the next one. And I'm not going to spend too much time on all of them. I just want to go through them as quickly as possible. So here's Review Plus. Review Plus, same layout. Again, a lot of the same questions. Okay. And what we have added in Review Plus is some specification about whether or not other requirements exist for your firm in terms of accepting this review engagement. Okay, but ultimately, are you accepting the client or not? Now, note that there's no yellow. One thing I didn't mention as well, in fact, Accounting Officer Plus did have some yellow. But in the other methodologies outside of RAC, we don't use the yellow and red quite as much. We're just leaving it blue. we have to put in a lot of conditional formatting to make those color changes happen. So don't think that now because it's not yellow, I don't have to worry about it. Please, you've got to go and answer questions. You've got to go and sign off procedures as you go. Don't ignore them and think, okay, I'm just going to skip this one. Okay, let's go to next one is Audit Light Plus. Audit Light Plus, there is no PIS calculation sheet included in here. So you would need to carry over your PIS calculation. So there's just the question. What is the PIS score? Still say PIS score there. We need to change that one. What is the partner conclusion? Have you accepted, not decline, have you accepted the engagement? So again, very similar, but there are going to be some instances where you need to go and document additional information, and you'll see there is space provided. We've answered yes. So you'll see already there's a little less automation happening in Audit Light Plus because the row doesn't appear or hide based on your answer to the previous question, whether this is yes or no. Okay, so please do note that. Okay, next one is then Attorney's Trust. Attorney's Trust. There's a long, this is where I was telling you earlier, you'll see some of the orange. We are putting a warning there, whoops, I hit the hyperlink, that guys, we don't have the new guide. And we're kind of between a rock and a hard place because you want to start the engagement, but what is the basis? It's like saying, okay, you guys go and do a review, but we don't have ISRE 2400 yet. So just go and do what you think is right based on the old one, and we'll see what happens. And that's basically what it came down to. And you'll see there's a bit of an explanation on the sheet as well, where we just go and show what changes we made to the guide to enable us to be able to at least give you this methodology to continue with based on the new act and the new requirements. Other than that, however, a lot of similarities once again in terms of the engagement acceptance and continuance. A lot fewer questions, just because a lot of these questions may have already been answered when you're doing the audit. And again, most critical, do I accept this engagement? Okay. Next one, go and have a look at agreed upon procedures. And agreed upon procedures, once again, similarities. We do go and again give you a little bit more information. This is a basic methodology, agreed upon procedures. If you go and have a look at ISRS 4400, it's not a particularly long standard for you to follow. So where has this come from? You'll see we have put references to ISRS 4400, which should help you, especially if you're new to the methodology or haven't done a lot of agreed upon procedures before. But once again, the ultimate goal is to decide and to show whether or not you're accepting this engagement. Okay, I think that has covered all of them. Yes, I've covered all those methodologies. Okay, so just to come back, that was 10.00. Come back to the slides. And now you'll see there's a little bit of a divergence that happens. Every single one of these methodologies had a 10.00. And a lot of them were very similar, if not identical. There's purpose behind that. When we get to the next document, 10.15, this document is unique to RAC. And I think what I'll do is we'll do this last document, 10.15 in RAC, and then we will take a 5-minute break, 5 or a 10-minute break, and continue with the rest of the documents after the break. So let's quickly go and have a look at RAC. Got to find it in amongst all my screens now. There we go. Okay, so RAC 10.15, audit type selection. Now, right in the beginning, and now we're talking nearly 7 years ago, the first job I did at Draftworx was I wrote RAC. It's been updated a lot since then. I think if we opened some of those early documents now, it would be virtually unrecognizable. But one of the things I really hoped at the start was that maybe we could squeeze a review into the same methodology. Not so much. Didn't work out. We've ended up carrying a lot of documentation from Rac into review, but there's also this uncertainty. Is a review a audit minus, or is review a compilation plus some extra stuff? There are a lot of opinions out there. So the drop down is maybe a little bit obsolete, but it's just confirming this is an audit. If you get here and you say, yeah, but I'm doing a review, you know, hang on, something's gone wrong. Okay. The desired level of detail in your planning documents. And if I hit that drop down, you have the options here between a low, a moderate, and a high. And what we've tried to do in some of the planning documents within Rac is we've tried to take out some questions or some sub-questions in some cases to try and help you speed up the process when you're going and you're doing like this really small client. You don't want to be asked quite as many questions as when you're auditing a bigger client. The problem, however, for us is, what do I take out? If I say I'm dealing with a small company and I don't need a lot of detail, how do I know which question to take out? What if you're working with an investment holding company and I say, oh, because you've said it's low detail, I'm not going to ask you any questions about group structures. And now you get to your planning documents and there are no questions on group structures. You don't document it anyway. That's not ideal. This is not a great turn of events for you, because where have you documented groups, related parties because of the group? Who's the directors of the subsidiaries? Have you considered them for related party consequences? So it's very difficult, folks, to try and scale down an entire file. But what we do have is actually a fourth option as well, which you don't see here. So while we do try and reduce some detail, and I'm going to select low, and there's a table below here that shows you how much detail is going to apply to each working paper. And you'll see that in fact, there are not a lot of working papers that have changed. All these rest of the documents still say it's the full detail. And why is that? Let's consider planning materiality. Just because you want to put less detail in the file doesn't mean you don't calculate planning materiality in the same way. You've still got to identify audit sections when you are doing an audit. There's stuff we just can't take out. But on some of the documents, we can start reducing. And I'll show you an example in a couple of minutes. However, this fourth option is called Rac Micro. And Rac Micro is designed to really just scale back to the bare minimum where we can. But the only way to get Rac Micro as an option is to go to this Rac Micro tab and to very carefully and painstakingly read this entire document. At least once, please. I spent a lot of time writing this. I'd really appreciate if you read all the rubbish all the informative stuff that I wrote. This questionnaire is not about trying to create compliance. So the first question is the PI score of the entity very low, i.e. less than 50? I don't care if it's 51 or 75. I actually don't mind. But I'm just wanting, basically, it's a get out of jail free card for me. Because if you go and choose to do Rac Micro and you have not got any clue of what you're doing, and the audit is a complete mess, I'm going to say, well, did you go and have a look at this questionnaire? Well, you must have. Because the only way to get Rac Micro as an option is to go and select not applicable or yes to every single one of these questions. Then I can go and use the drop down to select Rac Micro. So I know to get Rac Micro, you've jippoed something somewhere to get it. Not jippoed so much as if you got it incorrectly and you come and say, oh, but I didn't fill in the questionnaire. No, well, then you've done something funny. The last question is the most important, and that is the auditor, in using Rac Micro, must acknowledge that they do take greater care and responsibility for the completion of the planning documentation. Since the detailed questionnaires are no longer going to be used, it's the auditor's responsibility to ensure that the content of these documents is sufficiently completed. And what do I mean by that? What this question does, by saying Rac Micro, if I go and open up 12.10, right, that is 12.10. Document your understanding of the nature of the entity. That's all you have to document. I can open up the grouping, and this would be your questionnaire if you were following a low, medium, or large, or low, medium, or high detail. Lots and lots and lots and lots. You're still with me? And lots of questions. I probably scrolled too fast for most of you to be able to see how far I've gone, but there's a lot of information. This is row 714. Okay, let that be it. But that's the stuff you need to complete normally. But you telling me Rac Micro, I know this entity is so small that in this space provided, I can document sufficiently my knowledge of the business. Okay. Please don't choose Rac Micro on every single engagement that you're doing, because you're going to miss something along the way. If you don't know what Rac is as a whole, you're gonna mess it up if you just choose Rac Micro for everything. Okay. Understand where, what, how Rac Micro works. Then we have a question on the desired cycle approach, and the questions we've got here, or the options we've got here, is a full business cycles or a summarized cycle. And what we've done here is, with Rac those years ago, one of the first things we did was we brought in this concept of a cycle-based audit. So Rac, yes, is risk-based, but it's also cycle-based. And what we're trying to do here is we're trying to say, okay, if you go into an entity and they've got revenue and receivables, and you go and send two different clerks to audit revenue and receivables separately, they're going to probably end up going and asking all the same questions of one poor debtors clerk who works there, because they're responsible for sales and debtors. And now they're going to think these guys are idiots because two people are asking me the same thing. Why can't they just talk to each other? The business cycle approach says, listen, receivables and revenue are connected. So let's audit them together. So we build one system description for the whole revenue and receivable cycle. And then I've got one audit program which addresses revenue and receivables together. It addresses PPE and depreciation and investment property and fair value adjustments together. It addresses trade payables and expenses together, even cost of sales depending on your inventory system. The summarized approach is for these really small entities where, you know what, that approach is not appropriate because it is so small. It's a property owning company. They've got 12 invoices. They invoice in advance. The payment is received on the first of every month. I don't have a debtors clerk. I don't have a separate cycle that I've got to go and audit here. So rather than an audit program per cycle, we go and make an audit program per report. So income statement, balance sheet, each one of those has got their own individual audit program. This is not ideal for large balance sheets and income statements because you quickly run out of space. There's a maximum of 10 components on each audit program. So if you think revenue, cost of sales, operating expenses, depreciation, employee costs, we're already at 5. Okay, you could quite quickly, they're actually up to 30, I think, different income statement cycles that we have available, or components we have available. So this is really for the small entities, and it's just there to try and summarize and facilitate, especially box jobs where you have one or maybe two people working on an entire engagement and it's not complex, and the procedures aren't going to be complex, and the risk assessment isn't going to be complex. So let's rather go for the summarized approach. Default, full. I didn't mention that before. Default, if you're not sure, moderate is a good answer. Default for cycle approach, full. What about the assertion approach? And here again, we have a full or a summarized. ISA 315 lists 14 different assertions. There are, I think, 5 class of transaction assertions,
5 account balance assertions, and 4 disclosure assertions. But if you go and read them very carefully, and I know many of you have read ISA 315 in preparation for today's webinar, there is completeness listed 3 times. Completeness is a class of transaction and an account balance and a disclosure assertion. So ISA 315 gives you the option, if you wish, to summarize those assertions as long as you can prove that you have covered all the necessary requirements. Now, the default for me on this one is summarized because instead of 14, I have 7. And that's great for most engagements. I would, however, if you are going to go into an audit and you're anticipating a lot of risks, it might start becoming important for you to be able to specify this completeness applies only to account balance, and this completeness only applies to a class of transaction. Then you might want to go for full. Let's say you find a risk that impacts randomly revenue and property, plant, and equipment. Very bad example, but let's just say for argument's sake, you've picked up this particular error. Now I'm assessing that risk and I say, well, its completeness is the risk on revenue, but it's actually existence on property, plant, and equipment. Now you can't distinguish when you assign the assertions between completeness on revenue and existence on property, plant, and equipment. That's a problem. Because now when I open up my revenue audit program, existence/occurrence is listed as a risk. And when I open up PPE, completeness is listed as a risk. Most audits, you got 1 or 2 risks like that. It's not going to have a huge influence on your audit plan. You'll be able to absorb a little bit of extra work on PPE for completeness, a little bit of extra work on revenue for occurrence. It's not too much. I can deal with that. But if you're going to have 20 risks, sure, now this stuff might start adding up and you want to be a little bit more specific about where you assign it. Then I would go for full. But default for me is always going to be summarized. This table is to show you how much detail is going to be in each working paper. It allows you, if you wish, to increase the amount of detail. So you might decide that I want to do Rac Micro, but for the understanding the nature of the entity, I'd rather have that one on moderate. I'd rather have the questions. The other places, I'm happy with just paragraphs. I'll fill it in, but I do want the questions. So that'll allow you to increase. So you'll see I can go to moderate or full. I can't go lower than the minimum. So please just be aware of that. If moderate is the minimum, I can't go lower. So you can't choose, okay, this one I'm going to make Rac Micro. You got to choose Rac Micro and make some moderate. So just understand the direction that we're working in. Okay, folks, that is 10.15. Let me take a breather. I need a drink of water. Shane, I'm going to pause the recording. Great, thank you. Okay, so we've covered client acceptance, we've covered audit type selection, and now I'm going to have a look at section 10.30. Specifically in the audit attorney trust, which is the engagement letter. Now, there are engagement letters in the other methodologies, which is why I haven't said not applicable. But the others are, as I mentioned earlier, there is some level of your firm can choose specifics and can edit it. And there are funny terms about fees and use of working papers and retention of staff. So some firms like putting that paragraph in about you're not allowed to steal my staff members, otherwise I'm going to charge you. There's all sorts of stuff that people like putting in their engagement letters. So we don't want to be prescriptive about those. But for the attorney's trust audit, there are some specific questions that need to be answered on 10.30 in order for the engagement to be able to proceed. So I'm going to pop over to my attorney's trust methodology. And here is document 10.30. And what is critical here is who do you address? So depending on the nature of the firm, the attorney's firm that this engagement is about, how do I address this client? Is he the practitioner, the partners, the director or directors? Because that needs to pop up on the engagement letter as well as elsewhere within the file. So this is where that setting is changed, and you can type your own if you wish. How many bank accounts are operated? And the terminology used here is, when I refer to bank accounts in the engagement letter, do I refer to bank account or bank accounts? So this is just to help make that engagement letter automated. I need to know how many bank accounts there are, because you don't need to import a trial balance for an attorney's trust methodology. I can't go and check how many bank accounts there are in the linking. Okay. And then what jurisdiction is applicable to the attorney's firm. Okay. Now, please note what I've added here. No guidance is provided to indicate if the use of the legal practice counsel is correct. Okay, we have made this assumption based on what we can see in the Act and various documentation that we have tried to explore, but there is no guide for the format of the engagement letter since the Act was fully enacted in November 2018. So this is just to distinguish how it is addressed in terms of jurisdiction. And then that will then go and complete the letter, and it'll put the address in if you have included an address in the client setup, and goes through all the various sections. Now, just please note, and I want to zoom in on this, it mentions here for the period from 1 November to 2018 to 29 February 2020. That's going to have to change. We're going to have to issue that as a new, because that's going to now be for the full year, but this was more applicable for the 2019s, that we had to include this paragraph in there to stipulate which rules applied for which period. So we initially made those changes ourselves. Those changes are now going to come out for the 2020 engagements. And that will also just tidy up this engagement letter a little bit more. But now we're between this rock and a hard place. Do I make the changes, or are they going to finally issue us with guidance that I can go about making these changes? So if you're in a hurry and you urgently need to get an engagement started now, please be aware that we have not yet updated anything in this engagement since the 1st of November 2018 rules kicked in. We are going to follow the press. We keep checking the URBA website for any news, but at this stage we're still waiting on those outcomes. Okay, next document that we're going to look at is going to be the identification of sections. And this is a very critical document as well. I mean, all of these are, as we say, key decision documents, but there are decisions that you're going to make here now that will influence the size of your file. And you will note that the numbering is slightly different for Review Plus and Attorney's Trust. Now in Review Plus, just the nature of how the engagement unfolds, we couldn't put this document in at 10.20 yet. It was just too early in the sequence of numbers. And we're wanting you to be able to start at 10.00 and follow the documentation sequentially from there within the file. So instead of forcing it into 10.20 to be consistent, and then it feels out of place when you get there, because now I've got to go and fill out all these other documents, we've rather just renumbered it. And the same with the attorney's trust. There we're not dealing with PPE and revenue and trade payables. There we're dealing with rules. So again, the placement is slightly different. It just fits in better with the flow of the methodology. Now, once again, you are going to see some similarities, but there are some important differences. And I'm going to start out looking at Rac. And in Rac, this is what you will encounter. So we have got on the very left-hand side various components that you'll see on the face of your balance sheet, income statement, in your financials. We've got a hyperlink to the lead reference and a calculated value. Okay. Now, please go and check that this value is correct. If you've done some unusual linking, there might be circumstances in which these balances won't be correct in terms of what your financials actually look like. Remember, the ideal is actually that financial statements should have been prepared before an audit commences. So we're making the assumption here that you have linked these things appropriately. And what you need to do is go and decide whether any item is qualitatively or quantitatively material. Now, I haven't completed the materiality document, but it'll automatically go and see if the balance is above the material figure. If it is not material, and this is maybe not the greatest example, let's say for argument's sake, depreciation was not material. It would pop up with a yellow cell asking you, is this qualitatively material? And you need to go and consider whether I can continue my audit without checking depreciation. And it's a risky one. It affects your PPE. So you might decide that irrespective of the fact that it's quantitatively not material, it is qualitatively material and I want to audit this. Once something is material, I can't say, no, I don't want to audit it. Goes our new, nice, not quite so bright, but bright enough red. And you'll see that's an error. So I need to go and change that answer. Okay. What about a situation where my investment income is 16? Okay, because there's no materiality, it's not quantitatively material. It's not qualitatively material. Is this applicable to the audit? Do I actually need to go and audit investment income? And I can quite confidently say no, because it is not qualitatively or quantitatively material. However, what we do within RAC is we still ask you to go and perform a procedure on completeness. Because the only assertion that can be misstated for investment income is completeness. Maybe it should have been 16 million instead of 16. Maybe the directors are funneling dividends received into their personal bank accounts. Who knows? But that could be the risk area. So even though you say, no, we're not going to audit it, it's not going to appear on your audit programs, but it will appear on our completeness working paper within RAC. And that's something unique to RAC, the way we've approached these small balance items. Please be very careful if depreciation is 0. Oh, great, I don't have to audit it. Oh, well, really? Didn't I maybe just forget to do the journal? Be careful with 0 tax expense. I still have to do my tax calculations. My deferred tax, 0. Really, go and check that deferred tax. So just because it's 0 and it's not quantitatively material doesn't mean you can automatically go and say it's not applicable to the audit. So this you would have to go and say is qualitatively material, and therefore it is applicable to the audit, and then it'll form part of your audit approach. Now it also asks you questions about estimates. This is just to go and see if there's additional work that you need to do on estimates. There's a document 12.70. Please go and watch those videos. I'm not going to go through that in too much detail, but what it's doing as you're applying and saying you need to audit any one of these sections, it goes and applies it immediately to a section based on your decision if you're following a cycle or summarized cycle approach. Okay, and in the cycle sheet, you can actually go and edit these. If I go and delete depreciation, for instance, it's going to pop up and tell me that depreciation hasn't been allocated to a cycle. If you've got something sitting in this cell, in other words, if that's not blank, you won't be able to populate your audit programs. So please come and make sure that you've assigned all of your components to a cycle. But you can edit them, you can change the cycle layouts, that's entirely up to you. The assertions in RAC is there just to explain how we've summarized the assertions. Here are the assertions per ISO 315. We have very sneakily added our own called authorization specifically for journals, because when you read the standards and look at journals in the ISO standards, they're talking about authorization, so we thought we'd just add that one there on our own for journal testing, so that when you get to journal testing, you are making sure you're covering that aspect as well. Is the transaction authorized? Okay, but this is how we've summarized all of those line items. Okay. As with all our RAC documents as well, most of them have got a hyperlink to a YouTube video that can take you through this in detail. Okay, let's go and have a look at our next one. And if I go now to Audit Light Plus, you're going to see a lot of similarities because an audit is an audit. Okay. Same thing is happening here. What's your component? What are your balances? Please double check. Is it qualitatively, quantitatively material? Is it applicable? We've actually added the yellow here in Audit Light Plus as well. It will also, when I say yes, go and allocate it to a section on the far right. Okay. And then it will ask you about estimates here as well. So that is Audit Light Plus. There's not too much more that I need to explain because it's very, very similar. Okay. If we go to our Review Plus, now this one is sitting in a different section. This is 12.15. But can you see that the layout is similar? Got the component, got the lead reference, got the balance. We're asking about which materiality to apply. That's also available in Rac. I didn't show it to you, but it's on the far right on the Rac. Asking about qualitative and quantitative materiality. Now it's gone white here because it's not required until, so we've actually made these conditional formats a little bit more advanced than they are in Rac because it goes white if you don't need to do anything. But it's got some additional questions here. Is this an additional review component? So this allows you to go and force on various sections where you want to go and do additional work. There's also then a primary analytical. So here's your prelim analytical. You've got a primary analytical. If it's an additional component or it's a low balance, we're going to have a look at any variances. You ultimately decide if it's applicable to the review and therefore will fall on one of your review programs. And then it also asks you about accounting estimates if they are applicable, and we'll go and put it into a section. Okay, now just what I want to say, because I don't want to spend too long going through this document in detail. Please go and watch the training video. If you're doing a review ends up being a little bit of a cyclical approach where you go and just choose, okay, I'm going to do this. You go and do it, and you have to conclude, is it enough? If your answer is no, you're not feeling comfortable yet, you're going to go and design some more. Go and do it. Is it enough? Am I finding likely areas of misstatement? So in review, we don't talk about risks. We talk about areas likely to be misstated, most likely to be misstated. And there's a whole lot of different terminology. But you'll see the same approach is there. We've got the components. We want to allocate them to cycles at the end of the day as well. And this materiality sheet is there just to give you details of what materialities you have put in place. Okay. These items will appear on the analytical once I make them additional review. So what this does is it allows you to actually sign off these small balances very quickly. So if I did have the 16 in investment income in a review, my approach would be slightly different. I would go and make it an additional review item. Oops. Where did it go now? Sorry, it's when it's a 0. We go and just double check the balances, and it allows you to sign off various sections before you actually go and do detailed procedures on it. Because if the percentage changes are nothing, you don't have to worry about it. You can just complete your engagement on that line item. We're basically trying to create a way for you to very quickly sign off various sections so that you don't have to carry them through the entire engagement. Okay. Now, however, if we go to our next one, in fact, I'm going to first do accounting officer, because accounting officer is also a looking at balances on the financial statements. This is hugely simplified from audits and reviews. We still have the balances, but there's just a very simple question whether or not you actually want to include in the engagement or not. Because the materiality doesn't apply to an accounting officer methodology. You can still go and calculate materiality, but it is not something that you decide on in terms of what am I going to actually look at. This is based on professional judgment, your knowledge of the business. You would go and decide what you're actually going to include in the engagement rather than going and looking at materiality. So materiality falls away with agreed upon procedures. But then when we go to, let me try and find the attorney's trust here. When we go and look at attorney's trust, we're not looking at financial information anymore at all. Okay, in an attorney's trust, everything is material. So don't have to worry about materiality. There's a little working paper for materiality, but its conclusion is basically it is not everything is material. And what you'll see, this is what we have added. We have gone and tried to summarize what was applicable up to 31 October and what's applicable from 1st of November. The numbering changed, the referencing changed, but there's a lot of similarities. So where there are similarities, you'll see there's a up to and a from, and you can go and decide if each or any of these rules are applicable to the entity. So if the entity, the law firm, does not have any investment activities, you don't want a program to go and do work on it. It's just not going to be there because you're going to say, no, it's not applicable. And then that set of procedures won't even exist. So you will go and choose what is applicable. I just want to scroll down to the bottom so that you can see where there are differences. So when we get to Rule 54.19, there wasn't previously anything like that in the 31st of October. Now, in some cases, there was actually a rule there before, but it was never in the guide. Now, we don't know what that means. Did Urban miss it last time around, or what's the situation? But we've gone and included it, but because there's no guidance on it, we can't go and design procedures for those things yet. So when you get to these additional new requirements, you will need to go and put in your own procedures. Once you have identified the applicable rules, it then goes and asks you to confirm the applicable procedures. So for each of those rules, these are the suggested procedures from the guidance. Some of these procedures you actually do when you do the planning documentation, because it's going to knowledge of the business is some of the stuff, so that will be signed off. You'll see what section it's going to appear in. Each of these, you'll see there's space to go and put your own additional procedures if you want to. But when we get to the new stuff again, right at the bottom, as I said, unfortunately, you please need to go and insert your possible risks and procedures yourself. This doesn't appear in the guidance yet, so you'll need to go and have a look at it on your own. So that's attorneys' trusts. And then the last one is the agreed upon procedures. And guys, here it's very different because there's no examples. What is an agreed upon procedures engagement? You and the directors or managers or members or whomever it is sit down and say, they come to you and say, hey, we need your help. You go in, have a discussion. They say, hey, listen, we're having problems with our revenue. Okay, so what is management's objective? Okay, review revenue recognition processes. Okay, you, Mr. Agreed upon procedure engagement person, I can't call you auditors because this is not an audit. You, Mr. Agreed upon procedures dude, please go and design what procedure are you going to perform to address this objective. So this might be a little bit too broad. You might need to break this down into more bite-sized chunks because you need to go and design a procedure for each objective or requirement. So you would go and document the procedure, and then we go and already here, this is, guys, this is the discussion with management beforehand. What is the primary objective? So what actually has happened is I've put the primary objective as a requirement. No, hang on. Primary objective is review revenue recognition procedures. What objectives are there? Is revenue being recognized in terms of blah, 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 blah. Is our invoicing in compliance with, so on and so forth. What are the procedures that you're performing? Okay, primary purpose, you can go and put this wording on. Now, the idea is that this is actually stuff that's going to appear on your final report. You will say, XYZ approached us and they wanted us to do the following. Here's the purpose, here's the objective, and describe any limitations that you might have. This is coming out of ISRS 4400. So go and read it. And then there's just gives you what's going to pop out. So because of the above procedures did not constitute an audit or review made in accordance with the international standards of auditing, we do not express any assurance, for example, the accounts payable as of date. So you need to go and put in what's the limitation. Those two result in this paragraph on your agreed upon procedures report. So you're actually starting to write your report while you're sitting with management and deciding what you're going to do. What does the agreed upon procedures report look like? We performed the following procedures. List the procedures. So the way you write the procedure here is what should be in your report. And then further on in our working papers and agreed upon procedures, it's going to carry over those procedures, and you're going to write your conclusion on this working paper for each of those procedures. And when you've done all that, it's going to automatically populate your report. We performed the following procedures, list them. Our conclusions were as follows. You list them, and it just automatically carries over from the procedures document. So a very different approach, agreed upon procedures, than what we've looked at before, because you've got to sit down and work it out with your client. Okay. So that is identification of sections. Now what's left is all going to be sitting in RAC. And so we're going to look at two more RAC documents, and then that will be a wrap for the working papers. The first one we're going to look at is 12.95, which is the risk identification sign-off. Now there is a there is a process that needs to be followed in all of the other engagements, but that I've basically gone through now with you in the documents that I've shown you to populate audit programs. This one is the most critical. Without filling in this document correctly, you will not get audit programs. It's one of those more key decision documents. And basically what we're saying is, guys, this is your risk identification process. So this happens after the planning, theoretically. And we're just going to have a look at whether or not you've signed off any of these working papers in the planning section as a manager or a partner. I haven't. I haven't done the sign-offs. I haven't spent that much time prepping for this morning, so I haven't gone and physically signed off every single working paper. Sorry, that was on my side. All's well. There is a confirmation question here, and you need to be logged in as a manager to be able to complete this with a yes. What is the reasoning behind what we're doing here? We're saying, folks, we understand maybe you're under pressure and you haven't fully signed off and dotted every I and crossed every T on your planning, but hopefully you have identified the key risks that you need to carry forward in this audit. But you're now sitting in Pits on Water. I hope nobody listening is from there. Lovely place. You're sitting in Pits on Water. You have no internet connection. They promised that they would give edge connectivity by 2025. It's a wonderful place. No connectivity. It's great. What do? You can't phone the your audit partner because he's on holiday in Mauritius. You can't phone the audit manager because he's busy having a spa treatment. You're sitting at Pits on Water. You need to continue with this engagement. All right. What are you going to do? I need the audit programs. We're saying, is there somebody that has got sufficient trust within the organization that they've handed you that all-important, magical manager password? And you can log in and you can say, yes, I acknowledge that I haven't quite done enough here yet. But have you completed 10.20 correctly? Have you completed 10.15 correctly? Have you completed 10.10 correctly? Do you notice the pattern here is these are the documents that we've looked at this morning. Have you completed those key decision documents correctly, and therefore I can populate my audit programs? We don't want a biological assets audit program if there are no biological assets. However, in the Lowveld where I come from, it's wonderful. We see many businesses with buffalo on the balance sheet, even retailers. It's wonderful. So there's sometimes you're going to need that. So I can't assume, okay, let's just ignore having a biological assets audit program. You needed to have made the decision in 10.20. Oh, I do want biological assets. Populate the audit programs, and you will now have the biological assets audit program. But you also don't want a situation where you've got stuff that's not applicable. If you've forgotten to do it, or if you've done it incorrectly, you're going to have to change this later. So I'm just asking somebody with sufficient experience and knowledge, knows that they've done the right stuff in Rac up to this point, even though I'll get the sign-offs done, and don't show this video to Uber. Maybe the partner hasn't quite had a chance to review all the planning yet, but I need to get on with this audit. He knows the client well. We had very detailed discussions beforehand, so I'm confident that I'm on the right page. Please confirm this, and then you will be able to populate your audit programs. Okay, there's a validation sheet here that is going to go and check, are all components allocated to a cycle? Yes, that's coming from 10.20. Is 12.95 correctly confirmed? So I've done it. Everything's got a yes. Is 12.95 correctly signed off? Yes. It has to be signed off as a manager reviewed document. Please make sure you've signed it off. So you need to log in as manager to sign it off and to put in all the confirmations. And then this validation will work out. If you've done it all and it's still saying no to something, just tab from one document to another. That refreshes the database, and it'll allow it to go and just update and make sure things are right. And if I've done all of that, I can now go to my Rac tab. Hopefully this will work now. Live, you never know. Let's click populate audit programs. Hey, it's working. Bottom left, do you see this stuff happening there? That is generating my required audit programs for me. Okay, if nothing happens, maybe you've already got the audit program, so it didn't take so long to do, or maybe one of the validations isn't working out so well. So just go and have a look in your working papers. Oh, hang on, but I do have the audit program, so okay, I missed it. I've actually populated already, great. So you can continue, but in this case, I have populated. It's now got these audit programs that weren't there before, and I can go and open up my audit programs and continue my planning process. Okay, there's going to be a lot of errors on here now because I have not completed the planning documents correctly. So you'll see there's a little warning that's popping up here. Please open 1505, 1605, and 1705 in sequence before continuing. It's just a new little warning. That's why I'm getting all these hash values. So please don't be too concerned about that at the moment. You would go and populate your programs. And in fact, what I should probably do is let me go and open up 1505. $16.05. Why am I doing this? Because if I've raised risks and I just open the audit program, then I haven't assessed those risks properly in 1505, 1605. So this is just double checking that it takes all the values through the audit file correctly. 1705. And then I'm going to have to hold thumbs very tightly again to open up 30.20. No, it didn't work. Okay, I've missed something along the way as well still. Okay. The other key decision document that I need to look at is 18.00. This is also going to sit with hash values now because I've opened these files in the incorrect sequence. My apologies for that. And it's signs off here. There's questions. Once you've done all the planning, have all the planning documents been completed? Have all audit programs been adequately populated? And lastly, has the engagement partner given permission for the sign-off of the entire planning section? Now, when you do those three questions, folks, your audit program is going to open up in a new format, and your audit procedures are now going to be limited to those that you've selected. And okay, excuse the hash values, there are no procedures. If you sit in a situation like that and no procedures are showing up except these standard procedures, it means you've gone and done the planning sign-off too quickly. What you then need to go and do is go back to the planning sign-off, go and just mark any one of these questions with a no, and go back to the audit program, and then you can continue with the audit and selecting the appropriate procedures. In fact, there's a long video on audit procedures. Okay, go and watch the video about how you select audit procedures. There's not enough time between now and 11 o'clock to go through all that detail in terms of selecting audit procedures. Okay, all right, so folks, that is the key decision documents that I wanted to show you within RAC, and well, sorry, within all our methodologies. Just a quick note, as I mentioned a moment ago, flick back to my slides. Key decision documents, we've gone through these ones. These are the critical documents that you need to complete in each methodology to be able to advance. I've excluded 4 methodologies because the approach is not as critical. Not that it's not important, not that using the accounting officer old methodology means you can do whatever you like. Complete the documentation. It's just that the sequence isn't as critical. And as you can see, I've even made a mistake this morning with RAC, messed something up there. I'll have to go figure out what on earth I've done. But what's also critical is these steps that are followed as what's required to populate your audit programs. Now in RAC, you've got the RAC tab available on any workbook within RAC that you open. The same with Review. Review Plus has got a Review tab for every document within the Review template. But for Audit Lite Plus, for Attorney's Trust, and for Accounting Officer Plus, you need to open document 10.00. That's where you will see the RAC tab, and that's where you can populate those audit programs. Okay, so once you've opened up any of those documents, you'll see the RAC tab, and on the left-hand side, you'll see that Populate Audit Programs button. That then puts the correct audit programs in place for you, and you can then continue with the engagement from there. Okay, few last general comments, and then we'll have time for question and answers. Guys, the sequence is important, especially with RAC. And even though I put that warning now in 30.20, I mucked something up. I was hurrying it this morning. I missed something somewhere. So please don't think I'm just going to open the audit program and go on. It's not the correct approach. You need to follow the process. You need to look at these key documents. The other thing, just on the RAC templates, we see it time and again, and we see guys going and they decide they're going to roll forward all of the planning documents in RAC. Please don't do that. The roll forward areas in RAC are specifically designed so that when you roll forward, the information that's applicable will carry over to the new financial year, but it will put it for you in the newest, most pretty colors working paper with all the latest ISA updates. There are new ISAs coming. We are going to be starting our work on those new ISAs in the year ahead of us. We've got to update our working papers to make sure we're compliant with the latest ISAs. If you roll forward last year's working papers and you keep last year's working papers instead of taking the newest templates, it means you are not complying with the latest requirements. Working papers are a guideline, guys. Please always use professional judgment in deciding what you're going to complete and the amount of detail that you put in a cell. Firstly, do not write a book in a cell. Excel has a 32,000 character limit. Please don't try and test that limit when you are documenting in a cell. It will get lost in the size and the complexity of the working paper. You will not be able to print it. You'll not be able to view it. It'll throw things out of alignment. If there's a lot to document, please rather create a new working paper, import it into Draftworx, and put in the hyperlink. Then carry forward that new document to next year. Let's say you do a beautiful system description. Wonderful, import it into Draftworx. Roll that file forward year after year after year and just update it each year. Fantastic. That you can roll forward, but please not the RAC template itself, not the template documents. Remember that not applicable is a valid answer when it's based on your professional judgment. Okay, that professional judgment is going to pop up again and again and again in life, in any of these engagements. What is your professional judgment? Don't go and feel like you have to fill in every single cell. If it's not applicable, it's not applicable. Materiality. We have based our materiality values on discussion paper 6 of 1984 because that is what our regulator URBA has instructed. Not directly, but indirectly through file reviews. They're saying they want industry norm. Until such time as that view is changed by URBA, we're not going to by default have new percentages available, but we will in future, hopefully in this coming year, create a client portal where you can log in and put in your firm's decisions based on your firm's quality control manual. Because ISQC1 and the firm's quality control manual actually are so critical. If you decide you're going to use 1% of revenue as your materiality, because that's what Draftworx says, but your firm's quality control manual says 0.5% must be used, URBA are going to fine you because you haven't followed the requirements of your firm's quality control manual. So please, when you're using defaults in Draftworx, make sure that it's in line with your firm's quality control manual and ISQC1. The big news, of course, is that ISQC1 is supposed to disappear, and they're talking about the middle of this year sometime, ISQM coming out. And yeah, it's still a discussion paper phase. I've gone and read some of the comments from places like the accounting audit bodies and things like that that they've made to the international standard setters about ISQM. Implementation date is going to be 18 months after it's issued, so that could be December 2021 if they release it in June this year. Many, however, have said 18 months is too short, so we wait and see. Until we really know what the final outcome of ISQM is, we're not going to be able to do too much within Draftworx. However, once we've released cloud, we are going to be starting to look at a cloud platform for this as well, that ISQC1 documents for now, ISQM later, will be able to be done electronically in your web browser, rather than having a manual file. A lot of cool stuff we're thinking about around that, but that's still a process to get to. Okay, so that's my story, folks. Any questions, guys? At the moment, the question box is empty, so I'm waiting in anticipation for anything that you'd like to ask about. Difficulty here for us to try and work out what those procedures are is there are so many industries within South Africa. Okay, it is something that we would like to do, but understand that then we've got to go and write specific procedures for a number of different industries, and within those industries there are a number of different variations. So the approach for now that we've adopted is, guys, here are some standard procedures. The audit programs in RAC, if you design your own procedures for your industry, for your client, as you want it worded, those procedures will roll forward year after year. So as a balancing act between trying to design procedures for who knows how many industries with how many variations, it becomes overly complex for us to start deciding which procedures to use where. Maybe you decide that you're in manufacturing, but now somewhere in that entity, there's actually some different activities, and you're still relying on these default procedures, but not adjusting them. We just decided, look, here is a set of procedures. Use them as guidance to design your own, and hopefully that will then be sufficient for you, especially because you can roll that forward. There was a question about, as we were going, I think it was seen on 10.00, there's a reference to a working paper E3 in the Draftworx Quality Control Manual. The full comment is, if you use the Draftworx Quality Control Manual, refer to working paper E3. This is just for those that are currently using. We've got a manual quality control manual available. That's word-based. And there is a document E3 within that quality control manual. However, as I've said, this is something related to ISQC1 that we would like to, once our cloud is launched, build an online portal for this that you're able to access and view your quality control manual online. So it's not something that we've been trying to advertise too widely because it's a bit of a work in progress. We want to make a really, really great product for everybody, and then we can release that. If your firm does not have a quality control manual and you desperately need one, you can contact us at support or at sales. We do have guys that can come and consult and assist you to design and build and complete your quality control manual if necessary. But obviously all of that does come as a charge. The quality control manual does not come free with Draftworx. It is an additional purchase because that's something completely different that we need to keep up to date with these changing standards. And of course, as I said, the biggest one is this ISQM coming out probably later this year.
All right. Hey, thank you very much, Leon. I've just taken the liberty. There's lots of thank yous coming through. And Steve, thank you for your message. I'll just read it out. Steve writes, thanks, Leon, Shane, and the back room. The more I learn of this product, the more incredulous I am of the content you have packed into it. Earl, I hope you're still on board and listening, and Clarissa as well. Thanks for that, Steve. It's a nice little note to end off on.
Thanks very much. Yeah.
Yeah. Okay, Leon.